Hi there, Fearing here from Remek, and in this short video, I'll try to answer a question about Remek pivots asked by Chris on the forum. To understand Remek pivots and what it does, we need to understand market structure and price action. And I'll try to use this picture of these two wonderful kids doing something in the sand, drawing a picture in the sand to demonstrate the concept. One is market structure, the other one is price action. Think of it this way. When the children are doing their thing, drawing whatever they're doing in the sand, that's one thing. When they're done, they go back to their mom, and then I look at the results. When I look at the results, I don't see the kids anymore. That's market structure. I see the path of price in the past, whatever price did, but I have no information about anything else. The speed, the feelings, the emotions, the drama, whatever, the time it took, the complexity, the quarrels or the arguments or anything that went on while that pattern in the sand came to exist. Market structure is static. So price action is dynamic. Market structure is static. So let's look at how that translates into trading and how the understanding what the Remek pivot can do for us can help. Is a lagging indicator by default because it identifies the pivots. And by default, we need to go past at least a couple of bars, 4, 5, 10 bars after the event before we can interpret and file away that pivot as being pivot 1, pivot 2, or pivot 3. Pivot 3 being the most important, significant turning points on the market, and pivot 1s are being the least significant pivots in the market. Now, pivots meaning turning points. And the way we understand pivots at Remek is nothing calculated. So don't get other people use pivots in another meaning, in which meaning we never use pivots. Pivot is not something that we calculate. Pivot is not something that we have to spend money on seeing. Pivot is there on the chart for us to see. Pivot is simply our significant turning points on the market. We have 3 of them. We could have any number of them, of course, but to keep it reasonable, we differentiate between 3 pivots. I'm just cleaning up the chart in the meantime, just to remove everything that we do not need at the moment. And pivots basically identify important turning points on the chart as price moves. And they jump off the chart. We don't need anything, any special tools to see those pivots because we have eyes. Of course, there are smaller pivots, perhaps these less significant pivots, you see. But the point is that when this candle happened, or when any of these candles happened, every candle, every turning point, even the smallest turning point, whatever your time frame, starts out at pivot 1. Later, as the market keeps moving, those pivot 1s, the very insignificant pivots, for example, this one here, this started out as a pivot 1. Later, as more information came in from the market, our software, Remek Pivots, reclassified it as pivot 2 after a certain number of bars. And eventually, when even more information came in from the market, obviously many, many bars later, it turned out that this was actually a significant event or pivot in the market, the most significant we can have, and that is pivot 3. By the nature of this, constant reclassification of pivots as new market data comes in, it is a lagging indicator, and that's not a negative, that's just how it works. And as we develop as traders, there's a lot of factors. And there's a lot of factors, a lot of things happen in our brain, in the way we see the market every day. And I am convinced that Remek pivots, by using Remek pivots and understanding the concept and the dynamism of how price action forms market structure, how price action creates market structure, just like the kids create something on the beach, can help tremendously for us to develop that intuition, quantifiable and hard to quantify data that helps us make good decisions on the market. But without spending too much time on this about the theoretical aspects, let me just show you a situation here or an example. And I'm using a very long-term chart just to show you that Remek pivot can be tremendously useful as we go about our short-term trading or even long-term investment activities. So let me show you this. I'm going to put pivots on the chart. This is a weekly ES. And as you can see, this is the story of the last 10 years or more. The biggest bull market in history. And I'm just going to remove Keltner channel for a moment. And the way I'm going to start out, I'll show you everything in pivots right now. Here we go. I'm going to show you all the first, second, and third order pivots. It's going to be a very busy chart. And I'm also going to show you the signals. So as you can see, we have lots of stuff here simply because all the pivot ones are marked up. And by the way, all the signals after the pivots are marked up. So let's start to simplify. We're going backwards now. We're working backwards. First of all, I don't need the signals. So that already cleans up the chart a little bit, but I still have the 3 pivots. Now, since every pivot 3 was at one point a pivot 1 and another point a pivot 2, I don't think I actually do want to see the pivot 1s. They are, relatively speaking, less significant. You see all these pivot 1s here, for example? So let's hide them. Now I'm only looking at second and third order pivots, and suddenly the chart becomes a bit more meaningful. You see, for example, this pivot here is obviously a pivot, but which one? It is definitely a pivot 1 and a pivot 1. And if I displayed the pivot 1, probably I would have it classified as a pivot 1. Let's have a look. So watch this area. Obviously, it's a pivot 1, you see, at this point, because I don't have enough candles yet to classify anything else but a pivot 1. Later, it might become a pivot 2 or a pivot 3. But since this keeps the chart very busy, I usually do not display the pivot 1s. But just because I don't display them, they're still there. I now see the pivot 2s, which are pretty significant turning points. And I also see the pivot 3s, which are the most significant turning points. I always need a lot of candles after the event before I can classify or reclassify or promote pivots to higher grade pivots. So I think that makes sense. Now, as this process is ongoing, with every incoming tick, with every close candles, the Remek pivot indicator recalculates everything on the chart, going back 10 years if we have to. Of course, after a while, most likely the pivots will not change anymore, but it is quite possible that a pivot in the past, which was pivot 2, turns out to will be upgraded to pivot 3 if that's what price action created, and that's what market structure now shows. All right, now the point being is that this gives us significant information about how the market works and how we can plan events for us in the future. This is directly, I wouldn't say it's a trading tool. It's certainly not a signal generating tool, but it's a very important tool that shapes our thinking. So indirectly, it is very helpful. All right, just like when, let's say, a pianist learns to play the piano. Yes, of course, practicing on the piano itself, my fingers touching the piano is a very important part of becoming a pianist. But there's many other things that a pianist needs to do when the piano is not even there. For example, pianists might have to go to singing class or reading class, chart reading, music history, all kinds of other classes, which will become part of their being a pianist. Same thing with trading. This is a tool which is immensely helpful, although directly, this is not what we use when we press the button to enter a trade. That doesn't take anything away from their significance. Getting back to the point, I'll just hide pivots, pivot 2s as well. And now I'm only going to look at pivot 3s. Now, these are the major events of the past 10 years on the market. And of course, in hindsight, everything is very simple. And many, many opportunities. I'm the first one who says I did miss, probably many of us. But it is impossible with this kind of hindsight, these major events, when the market did something which would have, sometimes did, sometimes would have allowed us to act in a meaningful way. You see, all these breakout areas, retest areas, and breakout areas mark up important events in the market in the past 10 years. Some of them, of course, I'm just doing this very quickly. So I'm not saying everything was possible to see at the time, but like the COVID drop, for example, here in this area, I mean, this breakout, it was almost impossible not to notice the opportunity when the fourth time we started going. And if somebody didn't trust a thing, then this breakout area here, which was 21 at the beginning, end of 2020, led us to this significant rally at the time. Remember this low volatility climb that we talked about so much. Anyway, the point is that Remek pivot identifies pivot points, obviously, starts with pivot 1 in each case, and then graduates these pivot 1s to pivot 2s and into pivot 3s as market data comes in. This will allow us to shape our thinking. You could be on a 5-minute chart, you could be on a weekly chart. I use this weekly to show you that this could be significant knowledge, even on a lifetime basis, on a decade basis, to add value to our investment activities. But if you want to use it on a short-term basis, then on a 15-minute chart and a 60-minute chart, I think on a daily chart, definitely it can provide value. I also want to show you something else. And now, at this point, let's switch on the trend. Pivot, trend analysis based on pivot points is an objective way to analyze and to define the trend. It will not be perfect, of course, because decisions will have to be made. And then later data might come in that will negate those decisions or those classifications. And that's just part of trading. But by and large, very reliably, it will mark out trends in an objective fashion. So let's have a look. Here it goes. So I think this is an immensely useful tool to, first of all, shape your thinking in an indirect fashion, and more directly, define the trend and to force yourself to trade in a certain direction. Okay, so I hope this helps. Whatever your time frame, put it on a smaller chart, put it on a chart that you want to probably explore a little further if it can add value to your trading. But whatever your time frame you're using on, the most benefit, the biggest benefit of this indicator is to shape your thinking and to help you develop the ability to just look at a chart and see what's going on. So I hope this helps, and let me know your comments on the forum. Thank you very much, and mindful trading.